insurance space, there have been a slew of deals in the insurance space in the last few months. This has some experts saying consolidation is in the air. But with the insurance space on the brink of a massive expansion, thanks to various government policies and innovation by insurers, CNBC TV 18's Yash, Jain and Arundhati Ramanan report that India will soon have a whole new insurance landscape.
Max Financials is merged with HDFC Life. L&T has sold its general insurance business to HDFC Ergo. These are just two of the key developments in the Indian insurance space in the first 6 months of the year. And experts say things are just getting started.
I still believe there will be more consolidation. There are life insurance companies which are only doing 100 crore premium a month. You cannot survive with that.
But it's not just about smaller players getting absorbed by bigger players. Players are planning to expand at breakneck speeds considering low insurance penetration in the country. While ICICI Prudential's plan to list is just the first of many, new players are close to finalizing their India plans thanks to liberalizing of the FDI regime, so consolidation in its truest sense may not be on us yet.
There is a lot of headroom which is still there for companies to grow, and if you really look at it, well, there's room for 10 or 15 more insurance companies still there. So I don't see why there is a need to consolidate, except for specific company considerations.
It's not just policies like higher FDI limits. Experts say new rules for initiatives like bank assurance will be game changers when it comes to redefining India's insurance landscape.
Now, the major factor that I can see which will, lead to consolidation in an insurance industry is, there are a lot of regulations supporting this, like, the banca assurance or the, registration of corporate agents regulations when I speak at, which, majorly provide an open architecture for the bank, which, earlier in regulation 2002, if I look at for corporate agency, it was restricted to one life, one general and one health insurance company. Now it is an open architecture where, if a person wants to become a composite corporate agent, they can do so in a banca assurance, channel where the entities, including banks, can tie up with up to 3 insurance company in each category of life, health and general.
So too, the e-commerce boom specific to insurance.
The proliferation of social media and online channels and the willingness for people to buy online, which means reach is no longer at a premium, information is no longer at a premium. One does not need to have 5,000 branches to cover India. One does not need to have lakhs of agents.
Online space, like, if I look at the insurance companies, they have started, capitalizing on this particular opportunity by having a different digital, marketing departments for that. Because, the distribution reach that we are looking at, which will, in the end result will be the, increasing the penetration, will be very high in an online space.
So the rules of the game are changing, and so are the strategies insurance companies are adopting to stay ahead in the game. So inorganic growth is definitely a strategy most players will look at, meaning the shake-up in the insurance space will not dwindle in the short or the medium term. In Mumbai, with Yash, Jain, Arundhati Ramanan.